Let's shift our focus away from Tanzania now. And African central banks are continuing to lower interest rates in the first quarter of this year. Though, of course, some banks reckon we're approaching the end of that rate cutting cycle. Well, South Africa was the first out of the gate in late January, leaving its policy rate unchanged after a 25 basis points cut in November. Kenya's central bank followed on the 10th of February with a 25 basis points cut. And the governor there says the institution's goal is to get annual private sector credit growth to at least 10%. Over in Egypt, the central bank was the most recent to ease its rates about a week ago. It lowered its key policy rates by 100 basis points, and it reduced the reserve ratio for banks to 16%. Well, since April 2025, the Egyptian central bank has lowered its policy rate by about 725 basis points. But of course, once inflation is taken into account, real rates are still pretty high. That's at around 7%. Well, in Nigeria, where the policy rate is 27%, it is even higher at just under 12%. In the first part of this conversation with Ecobank Group CEO Jeremy Awori, he explains why vigilance against inflation is still vital, even as we approach the tall end of this rate-cutting cycle.
Well, firstly, it depends on the country, but I think if we're looking in general terms, I think we're coming closer to the bottom of the cycle. And then it's now one of vigilance, because obviously we have to watch for inflation. We've seen inflation coming down in many of the countries, but that doesn't remove imported inflation. So I think in terms of if we're looking at rates, I would say that we're probably at close to the tail end of that, but they have to balance that against also FX rates and the demand there. So if the rates go down too low, then that can also create other problems in terms of the foreign exchange rate that is applicable and the attractiveness of the market if people are to invest in bonds, for example.
You mentioned the questions around, trade disruption, and I want to focus on the US-Africa trade relationship because at around $80 or so billion into a trade in 2024, at face value, it's not exactly massive. Do you reckon that relatively small-ish compared to, say, EU-Africa trade flows sort of help to insulate the economies in which Ecobank operates in from some of the worst effects of this, fast-changing global trade policies?
I agree with what you've said. I think there's a few things when it comes to US trade policies. They create a level of geopolitical uncertainty, and that can have some degree of contagion effect. It also affects the trade corridors, and it's affecting manufacturing locations, which have longer term implications for trading between nations. So whilst you're right, the US trade with Africa at around 80 billion isn't significant. Like if you compare that to China, where it's over 300 billion, we cannot still discount the impact of US trade policies. When we look, for example, at AGOA, which was relatively stable in the years that we've seen over the last few years, what we've seen is that now there's uncertainty because it's being reviewed on an annual basis. So that creates a level of uncertainty for manufacturers and exporters to the US. So this is something we need to watch overall. But by and large, I think we still come back to the focal point, which is there's room for Africa continental free trade that gives a degree of insulation against some of these policies. And we still need to watch for imported inflation in terms of things like fuel prices, among others.
With respect to trade diversification, are you seeing among your clients, are you seeing a lot more intra-African trade? Because I know the objective under the CFTA is to try and get trade within the continent as a whole to essentially rise up beyond current levels of around 12–15%, get that to at least 30% as fast as we can. Are we seeing that happening now that there's a bit of macroeconomic stability coming back into the picture?
Definitely. One thing that is becoming clear is African leaders are much more focused on what we need to do to drive up Africa continental free trade. So we've got Africa being focused on, we're looking at policies, countries are looking at where they can trade with each other and try and trade within local currency, which will also help their reserves. We're also seeing some significant projects that will definitely help between intra-Africa trade. So if you look, for example, at the Dangote refinery, that just doesn't provide refined fuel products to Nigeria, but it also provides them across the neighboring countries as well, which again will boost intra-Africa trade. So we would really hope to see more value addition across all segments, whether it's in mining, whether it's oil and gas, whether it's agriculture, to push up this intra-Africa trade going forward. But there's still issues we need to solve in terms of non-tariff barriers, bureaucracy, among others that I think our political leaders are increasingly focusing on addressing.
How much more demand are you seeing for currency diversification? Because we spoke about the China-Africa trade relationship, well over $300 billion a little earlier. The bulk of that trade is still denominated, for the most part, in the US dollar. Are you seeing your clients coming to you and saying, well, why don't we try and move these transactions to the Naira RMB or the Rand RMB or the Kenya shilling RMB?
Definitely. One thing that's become clear, and we've seen the implications of just the change in rates of dollars, not just on reserves, but also from a trading perspective. So we're seeing countries really looking at that diversification. So when we look at reserves, we are seeing countries using gold as an alternative, number one. When it comes to trading, definitely, like we talked earlier about trade with China at approximately $315 billion in 2025, definitely we're going to necessarily see more options around renminbi, direct conversion into African currency. So that's definitely something that is being looked at. We as a bank are supporting our clients with that, and also direct settlement with renminbi as well. So that's something that's important. We also need to look at trading in African currencies. And this is something we're working with the likes of the Afrexim as well as AFDB to just manage the settlement of that. Because if we can trade in our own local currencies, that takes off the pressure on the need for US dollars. The last thing is really also what can we do to actually settle and have the payments rails that would make this quick and effective for our clients, especially SME clients who are either importing or exporting. So yes, I agree, we will see more diversification into the future, which should help ease trade and improve the position of the countries